evening. It's my pleasure to welcome all of you today in the second symposium on healthcare hosted by the Graduate School of Business. I thought that since all of you are here, instead of waiting for more people to come in, let's get started because I know it will be an exciting evening with lots of questions that we have the opportunity to ask to our panelists. And I'm Vinata Mukherjee, the Director of Healthcare Programs at the Graduate School of Business. And sitting right there at the registration, welcoming everyone is Diane Wen, who is the Program Manager, who has been working really hard to put all of this together. Before we proceed further, I wanted to, just by show of hands, wanted to see how many of you have Twitter accounts and tweet. Oh. Very few. Well, then this will probably be your day to learn, get some social media training because we have arranged for Twitter accounts. We will be live tweeting this whole event. There are two hashtags. The first one is the JDSB Healthcare, and you can download the app while sitting there and enjoying the presentations, and you can start posting your comments, pictures, whatever you want throughout the event. And if you have questions, you can go to the second one, hashtag JDSB Healthcare today, to put your questions up, and at the end, we will take all of the questions. So growing up in India, for me, healthcare and health insurance for healthcare was a completely foreign concept. So when I started in here, my inquisitiveness led me to find out what is health insurance, because in India, everyone paid out of pocket for every kind of healthcare need. And it's more or less you got what you paid for. If you could afford it, you could go to the best world-class facility. If you couldn't, you could go for treatment, which is probably in the public hospitals. So I found out that it is way back in 2100 BC that in Babylon, the first concept of insurance was already getting established. And it was really a question of protecting traders against loss, financial ruins, for unforeseen calamities. And from then onwards, I found that the concept of full risk spread amongst traders in the whole of Europe. But it was really the Romans who started including social issues, death, and disability in the insurance concept. But it was not until 1688 when the first loan insurance companies was formed in the outskirts of London. And it was really ship owners and builders who started to form this company, not only to protect the ship industry, but various other industries. And it took almost about 100 years for insurance company to start in the United States, but that was also primarily against protection for property. Then after that, there was a big period of almost 100 years, and not until the 1900s there was any call for insurance for healthcare. The primary reasons for this was medical science was really in its infancy. There were hardly much treatment available, and most people who were getting treated were getting it at home, provided by friends and family. Few hospitals existed. Drugs were very few. So there was really no need for something like an insurance. And moreover, the insurance industry didn't know how to calculate risk at that time, and they didn't find the need to make a product or risks which were difficult to evaluate and also to be profitable at the same time. But having the Great Depression, when most of the hospitals started struggling and medical science had advanced, that was the time struggling hospitals started thinking about getting health insurance. And in 1921, I found was the first concept of insurance that came across in Baylor University Hospital at Dallas, and that was the foundation of Blue Cross for hospitals, and which led to the foundation of Blue Shield for the physicians. It was in 1993 that the concept of HMO started being created and taking roots. It was Sidney Garfield, who was a medical practitioner who had just graduated and wanted to have some source of earning. He got in touch with Henry Kaiser, or rather he was serendipitously put in touch with Henry Kaiser, who had this industrial indemnity consortium. And there he said that I will provide health care for all your employees, which was about 5,000, against a prepaid fixed fee. And that led to the formation of Kaiser Permanente in Oakland in 1940. In 1942, the Wage and Price Protection Stabilization Act following World War II, or in the backdrop of World War II, led to the And by 1960, we find that almost 3/4 of Americans had some form of health insurance. 1965, Medicare and Medicaid was implemented, and Henry Truman was the first person to be enrolled into the program. And finally, in 1970, we had the Managed Care Act passed. So today we have a situation where almost 71% of our huge $2.8 trillion of healthcare expenditure is coming from some form of insurance, whether it is private or federal funded. And then the last thing, the most recent thing that happened to all of us here in this country is the Affordable Care Act, which was passed in 2010. The main idea being focused on access, quality, affordability, and cost containment. The idea is to expand access to insurance coverage to about 32 million, whether it is by employers, individuals, indigent, through the creation of health exchanges and subsidies. And considering where we are right now, which is here, where phase 1 is over, we are right in the middle of phase 2 of implementation, and the evaluation of what has happened in the earlier phases is starting to take place. We have had 2 series of enrollments, 1 full year, so we thought it's a great time for us to look into what is happening with ACA with some great experts in the field that we can find in Houston area. So with that said, I would like to introduce, first of all, our moderator for the evening, Ishee. He is an assistant professor at the University of Texas Health Science Center at Houston, and also he is of Counsel at Vorys. Welcome, Jonathan. Then I would like to invite the rest of the panelists, David Milich, CEO for South Texas United Healthcare. He will be giving us a perspective of the big employers. I would like now to invite Mike McLaughlin, who is the president of Core Benefits. His focus area is providing health insurance to small employers. Joe Middleton, who is the co-owner and CFO of TradeMark Insurance Agency. Her expertise is with individuals under 65 years of age purchasing health insurance from the market. And finally, of course not the least, I would invite Janda, President and CEO of Community Health Choice, who is going to talk about what's happening with ACA with the Indian population through Medicaid. Welcome, everybody.
also in the private sector have employers, insurers, brokers and agents, and individuals. And I think one of the things that we'll talk about with our panel of experts is a lot of people kind of focus on Affordable Care Act, the marketplace, but one of the things that hasn't been really focused on is kind of the role that the brokers and agents play in helping people find insurance, making sure that they actually know what type of insurance they're going to be purchasing, and then those types of things. I thought this was good because this actually talks about, this is from 2012, but it talks about health insurance coverage pre-individual mandate effective date. So if you look back in 2012, and I know ACA was passed in 2010, but until 2014, no one really had to comply with the individual mandate. As you see, the area that is important, I think, that's interesting is the adult's age, 18 to 64, because if you're over 65, you probably have Medicaid, and if you're under the age of 18, or if you're a child, you may be able to qualify for Medicaid. So as you can see right now, 2012, the percent of uninsured was about 20.9%. And then the percent with private insurance is 64.1%. But it's important to realize that the percentages are at the time that the Centers for Disease Control actually interview these people. So this doesn't cover if someone loses their job or switches jobs, those sorts of things. So we had passage of the Affordable Care Act. 2014 was the start of the individual mandate. Some of the highlights of the Affordable Care Act. For the first time, all individuals must have health insurance or pay a fine. It expanded Medicaid to states that actually took the Medicaid money. And as I said earlier, Medicaid is a state-federal partnership. So if a state doesn't want Medicaid money, they don't have to take it. They extended, of course, what you probably heard in the news, extended, because that was the thing that the Obama administration was pushing a lot of times earlier in 2010, 2011. There's a lot of pushback for the Affordable Care Act that extended the period of time that children would be covered under a parent's health plan, established the health insurance marketplace, established a subsidy program for low-income individuals who basically made too much to qualify for Medicaid, and then also required coverage of pre-existing conditions. And so the whole idea of this is that you have this kind of continuum of people and socioeconomic classes, and everyone in that continuum would have coverage. So at the indigent level, you have Medicaid, and at the other end, you have people who can pay full freight for health insurance. And then in the middle, you have those people who make too much to pay for Medicaid, or to qualify for Medicaid, but need some help in premiums. So I thought this graphic was pretty good because it kind of shows all of, it discusses that. As I said earlier, 2014 is the first year there's an individual requirement to have health insurance or pay fine. One of the things I hear a lot of is that, well, I don't want to get health insurance and I only have to pay a $95 fine. That's not technically correct. It's $95 or 1% of your income, whichever is greater. So if you're a high income earner, that could be, and you're self-employed, that could be a pretty hefty penalty. And then, as I said earlier, the individuals who kind of fall within that subsidy support program have to have incomes between 100 and 400% of the federal poverty level, and then they're eligible for some type of subsidy support, and it's on a sliding scale. As this is called, everyone knows, the rollout of the Affordable Care Act was not smooth as everyone would have hoped. There were a lot of issues, and some of the questions we'll ask the experts, we'll get them to weigh in on these. But we had states who refused to participate at all. So they didn't want to create a state marketplace, insurance marketplace, which then defaults to the federal government. They did not want to take Medicaid expansion funding. We had issues that once the federal marketplace was up and running, the first day that people could enroll, of course, everyone heard on the news about the fiasco of people waiting for hours to try to enroll, and they couldn't enroll. We had people who had issues with, who had pre-existing health insurance policies, but the policies did not qualify under the regulations, so they had related to the limits and the types of coverage that were required for policies. You have people who had their health insurance policies canceled. We had people who purchased health insurance thinking they could go to the doctor, but did not realize that they were in a narrow network, which basically means there were only certain healthcare providers that they could go see for in-network coverage. And then you had public infusion and premium increases. That being said, the most recent data indicates that people have been getting health insurance, so it hasn't been a total failure. And the Congressional Budget Office indicates that basically the number of uninsured Americans will decrease to 12 million in 2014. Of course, the data still, you don't have any finalized data on that. And 26 million in 2017. So basically, as I said earlier, the verdict on this is it's still out. The jury's still out. It's been successful, but we don't know how effective it has been. And that's basically a very short overview of where we stand right now. And I'd like to open it up to questions from the panel. And I don't know if anyone has any questions that they would like to ask the panel related to health insurance. With their thoughts on health insurance?
Game over, huh?
I have a quick question.
Well,
Can you
wait.
go back a slide?
Sure.
I don't get, if 20 million Americans gain coverage, but the number of uninsured decreases by, the number of people who gained coverage was 20 million, but the number of uninsured decreased by 12 million. I don't understand that statistic. I would think it would be the same, 20, 20, or 12, 12.
Are you talking about this slide?
No.
That's people who are covered by it.
That way.
Boom, right there. Okay.
So one of the questions they had was, one of the things I should have highlighted is, because this is a Congressional Budget Office report, is that they don't know, they're just saying 20 million people gain coverage through the marketplace. They don't know if you had existing coverage and you purchased it in the marketplace, or you were totally uninsured and then you were the first time you ever had it.
Okay, so out of that 20 million, they think 12 million were uninsured from the get-go.
Yes.
And the other 8 already had insurance of some kind, but they got their new insurance through healthcare.gov.
That's correct.
Okay, thank you.
Or they could have, maybe gotten a job where they actually had insurance in a different source, like for a governmental Medicaid program, and now they're out of the marketplace.
And there was probably a small net decrease in small employer insurance that shifted the marketplace as well. So there's actually several different moving parts. I was going to suggest, before we get into comments, just to have the 4 of us do just a little bit more introduction.
Sure.
Help.
Yeah.
And I would also suggest maybe just a short, what do we see from our perspective on your slides? Is that okay?
Sure.
Oh, not just feel free.
Yes.
I was on the end, so I could go back. Okay. For those of you that don't know me, I'm Ken Janda, I'm the CEO for Community Health Choice. We're a safety net health plan that was started by the Harris County Hospital District. We primarily operate in the Medicaid and CHIP space. Right now, we have about 265,000 people in the Houston metropolitan area covered by Medicaid and CHIP. We're also a new entrant into the individual health insurance marketplace. We do not operate at all in the large group, self-funded market or small employer market at all. And so, as Jonathan said, last year, 2014, when we started the marketplace, it was bad. It was a mess. There were lots of confusion. The website didn't work. So I would say, though, that this open enrollment season that we're going through right now is 1,000% better in terms of the website working, people being able to get access, the choice of health plans in the Houston metropolitan area and throughout the state of Texas is much better. Last year, in 2014, we signed up about 734,000 people statewide in the health insurance marketplace. We think about 500,000 of those people were actually insured before, and only about 250 or 300,000 actually were uninsured before. So there was a lot of conversion of the existing individual market here in Texas. but it was 734,000 people signed. Through last week, there's over 900,000 people signed up in Texas this year, and we're sort of projecting that that's probably going to be something like 1.2 million by the time we're done. So clearly, I think one of the big changes from the Affordable Care Act, obviously I'm talking too long, sorry, I'll stop after this one, is a big shift in the number of people that are going to have individual health insurance policies away from either small employers or even employer-sponsored insurance, because you have a lot of people that are part-time workers, those kinds of folks that are buying individual coverage. So the big change to me that the Affordable Care Act has had is that it's dramatically shifting the number of people who will be making individual decisions about buying health insurance rather than through their employer. The Medicaid thing is not really.
Good evening, I'm Dave Milich. I'm the Chief Executive Officer for United Healthcare Commercial Group of South Texas. So I should clarify what South Texas means. So for us, South Texas is essentially the southern half of the state. So I have responsibility for all of our commercial business, which is generally employer-sponsored plans, although I do have responsibility for our participation in the exchanges through the Affordable Care Act for the southern half of the state. So if you look at that geographic footprint, or you actually expand it to Texas, we insure or provide self-administered benefits, self-insured benefits to about 4 million Texans. So we're a large footprint. We actually have 12,000 employees across the state of Texas for United Health Group. And we participate in and offer products in all different spaces. The commercial group, which I represent, we also participate in Medicaid programs, Medicare programs, offer both full risk as well as self-insured products to customers. And I guess my role here is more of from a large employer perspective. What I would tell you, especially for self-insured employers, the Affordable Care Act is one of the few laws that really greatly impacted self-insured employers. So everything from benefit design to contribution requirements to participation impacted self-insured employers, where historically, because insurance is regulated at the state level, they didn't necessarily have to abide by some of those state regulations because they were part of the RISA programs. So we're in the midst of living and adjusting to the requirements of the Affordable Care Act. And as Ken said, I think like anything else that's a major change, over time we adjust and learn how to make it work, for lack of a better term. And that's kind of where we are right now. Every January there are additional parts of the law that come into play that we have to help our customers understand the potential impact.
Good evening. I'm Mike McLaughlin. I own an agency here in town. It's an insurance agency, and my customer is primarily business owners. I'd say 99% of who we work with are businesses. Our target market are companies that have between 20 and 50 employees, but I can tell you our largest customer is in excess of 2,000, and at any given time, I guarantee you I have a one-man group on the books. So that's our gamut, but our hunting ground really is the under 50 market, and that's where we do most of our work. I think Dave covered a lot of the impact that's come down, and maybe not so much on a large group because we're not dealing with penalties when we talk about small companies. So the struggle there has just been trying to adjust to what's available, because it's not so much what you can do, it's what you can't get in a small group. So they restrict the availability of markets, and before we had insurance policies, now I have grandfather policies, grandmother policies, and grandfather policies. And so there are different places where each of those are, and so that each of the customers has to deal with the laws on each of those categories. So our job is to help them navigate not only what's going on from the legal perspective with the ACA, but also what they have to do with their employers. Our dialogue has changed very much over the last 3 years. I can tell you that in the old days, I very rarely talked about DOL audits and complying with HR requirements now. And today, that really is our focus. We do more of that work than we actually spend time talking about benefits. I had an hour and a half appointment yesterday with one customer. I spent literally 5 minutes discussing benefits and the other hour and 45 minutes roughly talking about what he had to do to administer those benefits to the different classes of employees he had. And that was a 48-day.
Good evening. I'm not quite sure if I'm going to be the roles of the floor, and I guess we'll figure that out as we go along. My name is Joan Middleton. I'm the co-owner and CFO of TradeMark Insurance Agency. It's an agency that was started over 30 years ago by my husband. I'm here this evening to really give you a little bit of a perspective of how the Affordable Care Act has affected individuals, people under 65, as well as Medicare. That's the two lines of business that I particularly specialize in. I can tell you that it has had probably the biggest impact with my individual clients. Some things have been good, some things have been not so good. The good news is it's very complicated, and for as long as it's complicated, I have great job security. So that's the bright spot that I can tell you about that. I can tell you that there are some of the things that have been a very great shift for people to understand is prior to this year, if you were an individual looking for health insurance, you could call me in my office, and it didn't matter what month of the year it was, I could find you a way to get insurance. That is not the case anymore. Now you have an open enrollment period that you have to sign up for insurance during that open enrollment period. And if you don't sign up during that open enrollment period, unless you have a special qualifying event, and there are just 2 of those, you can't get insurance and you will start paying a penalty. The biggest fear that I have are the people out there right now that did not sign up last year for insurance. They said, oh, I'm just going to pay the penalty, or it was too hard, I didn't know what I was supposed to do, I didn't know if I was supposed to use the exchange, and they're not going to find out until they file their taxes close to April 15th, that not only do they have a penalty for 2014, but they've now missed the window to sign up for 2015 as well, and they're going to be paying a much larger penalty for 2015. That's a big concern. There doesn't seem to be any hope on the horizon of how we're going to fix that problem at this point in time. Medicare, that's a whole other story. We could spend a lot of time talking about that. But essentially, the Affordable Care Act, as it stands right now, has not had a major impact on Medicare. There are some minor things and changes, which I'm sure we'll talk about a little bit later, but it's really been my individual clients under 65 that have been impacted. I can tell you that as an agent who is certified to sell both on and off the exchange, to Ken's point, we definitely had some improvement this year. The first person I enrolled last year on exchange was in my office for 5.5 hours while I tried to get in through that mess of the website and it crashing and everything. Now I can usually get them done in, depending on the situation, maybe 10 minutes, usually more like 20 to 30 minutes, maybe 5.
So kind of following up with that initial your thoughts of the Affordable Care Act. I know some people will not be able to necessarily, or may not feel comfortable answering the question, but if you could change one thing in the Affordable Care Act, what would it be?
I'll take a stab at that. That's actually a big list, but I'll start off with saying that I'm a big believer in having competition. And, the Affordable Care Act really reduces the number of plans that are out there. I think having more choices is better. It might be more difficult to navigate, but it certainly helps the individuals get to where they want. So if I had a wish list, it would be that a carrier like United Healthcare wouldn't necessarily have to have as its own marketplace the ACA plans. I just want to see more capability for my customers to make decisions on what they want for their employees and themselves.
I can't limit it to one, but I can limit it to 2. the best I can tell, almost all of the employer requirements, almost grandfather and grandmother and all that stuff, is really unnecessary. If you have an individual mandate, if individuals have to have insurance, that's probably all we need. I think there's just way too much burden on employers in the Affordable Care Act. And employers will figure out what they need to do to either keep their workers happy and they'll offer benefits because it's the right thing to do, or they will say, go to the marketplace and figure it out on your own. That would be my number one thing. The second change that I would make is actually not in the Act itself, but in the Supreme Court interpretation of the Act, which is that it really is very unfortunate that we ended up with this bizarre situation where states can decide to opt in or out of the Affordable Care Act. Because there's a tremendous amount of unintended consequences that Texas hasn't yet figured out by opting out of the Medicaid expansion. Texas will eventually figure this out and will eventually do the Medicaid expansion. It's a question of how long we have to have a whole bunch of people, a million to a million and a half people kind of thrown under the bus, public hospitals thrown under the bus, continue having a fragmented safety net system until we actually figure out that it's really in our best interest to do the Medicaid expansion.
I guess it's difficult to say what you would change, because I think so many things are intertwined, and so when you make a change in one area, it impacts another, and there are a lot of potential unintended consequences. So, for me, it's difficult to say what you would change without, to Ken's point, being here for quite a long time to say, well, if this, then that. Our focus right now is, because we're an organization that not only operates here in Texas, we operate in 50 states around the country. Living with what we know today, and the best way to implement that on behalf of our customers and make it as easy as we can. And, conjecture in terms of what might change or what we would change, we'll just kind of wait and see what does change. And then we'll react.
I would say there's a couple of things that I would definitely change. One of them would be the whole purpose of the Affordable Care Act was to make health care more affordable. This act is to actually focus on what it does to health insurance. It has absolutely no impact at all on what's happening to the cost of your health care, and you have no transparency to be able to see how much your health care is going to cost. I'll give you an example. You'll call someone and ask them how much it costs for an MRI. They're going to ask you 4 million questions, all of which you won't be able to answer, and you won't be able to get a straight answer from any provider that you ask that question to. So that would be the first thing. The other thing that I would change is I would like to have, as Mike said, plans available that as an individual I can choose the type of health care that I want. As a woman that is not going to have any more children in your life, I have enough, thank you. I don't want to have to pay for maternity coverage in my plan. I certainly don't want to have to pay for pediatric dental. I don't have any kids in school. But because of the way the law is structured and because of the way the essential benefits have been designed, everybody has to pay for those things. And I just think that we should have no choice. We should be able to opt out and opt in of the types of coverage that we want.
We can now take a question from the audience. Does anyone have a question they'd like to ask the panel? Yes, sir.
Yeah, the figure that you threw out, that we have 11 or 12 million fewer uninsured people today than we did a year ago,
Yes.
right? And you guys are all insurance industry people representing that who have, at least from a business point of view, the government has developed this plan, which is giving people a ticket to get on your train to buy insurance, to get coverage. And so, but the tone of your presentation is all about lots of problems, lots of issues, lots of complexity, but overall, I want you to know it's kind of glass half full, glass half empty. You've got 11, 12 million people who are now customers of yours that weren't a year ago. Is that not something that your companies recognize or appreciate? Or is it just making more headaches for you?
I'll go first because I'm probably the most optimistic person here. In almost any crowd. The Affordable Care Act has been great for community health choice. We love the Affordable Care Act, just to be very, very clear.
Okay.
All right. We added about 12% to our membership last year. At least part of that was Medicaid people. This woodwork effect, which I thought wouldn't happen, but actually did happen in Texas. There are more people on Medicaid now because they look at these different things. My only frustration, really, or my primary frustration with the Affordable Care Act is actually in that Texas hasn't embraced it as much as other states. And so, Texas had absolutely, as a state, the most to gain from the Affordable Care Act in terms of reducing the uninsured and drawing down new federal funds. And we, as a state, have resisted that. And so, I was counting on even more members than we got, because we would have gotten more of the Medicaid members. We should get more people in the exchange. But the exchange, the health insurance marketplace, is going to explode in Texas. And it will continue to grow for many more years unless the Supreme Court says no, because you didn't establish a state exchange. You don't get the subsidies, which is the key case for those of you who are following that. The Supreme Court could say people in Texas don't get the subsidies because Texas does not enact its own exchange. If that happens and Texas legislatures say we're still not going to set up our own exchange and we're just going to throw 1 million or 1.5 million people under the bus, which is likely to happen, it would be a real shame for my standpoint.
Yes, I would certainly agree. Obviously, as a health insurance organization, we want to expand affordable coverage to as many people as we can. I do think oftentimes we get caught up in the politics of it all. Our participation in the exchanges wasn't very large in 2014. In 2015, we're entering about 26 different states, different markets to participate in that. So we're certainly happy about the opportunity to be able to serve more individuals. I also think it's fair to say that there are ripple effects by reducing the uninsured and how that might impact long-term costs down the road for large employers, small employers, because of the way cost is spread out over a broader group of people. But certainly at United Healthcare, we're happy to be able to expand care, affordable care, to more individuals.
The impact that the ACA has had on my agency has actually been very positive. We've had one from 10 million in revenue from 6 million in revenue to 10 million in revenue since the Act passed. So the positive impact that you're discussing, yes, we have seen some fruits of that. The questions up here really have been, what would you change about it? So that tends to look like it's half empty because that's what we're focusing on, is how to make it better. And sometimes tough questions about how to make it better, you have to go out what's wrong.
Yeah.
So having said that, the agency has done well with that. I will tell you that my customers have fared less well with that. I do believe that what Dave has said is accurate in terms of, the price. I've seen, not a lot, but we've had customers drop their coverage completely. There are other unintended consequences that, if my employer does the right thing and offers coverage and pays for it at 100% for one of his employees, do you recognize the fact that he just disqualified his spouse from getting a subsidy? Just saying, but are there things that need to be fixed? Yes, absolutely. Do I think that the law has potential long-term? Yes, but I am concerned about the direction where the law is going. It doesn't necessarily follow. And what I would like to have is my personal insurance. I'm blessed to do business with a lot of doctors. I am blessed to have the ability to call them and say, hey, I need to talk to you, and go over that night to their house and have a look at things. I'm in an unusual position. The average person does not have access to care like I have. So, does that provide access? Yes, it does. But, you know, then we got a whole other conversation. As Dave was saying, when you squeeze the balloon, you know, it pops out someplace else. So, the question I had was, you know, Ian and Jinx, when they went and saw the emergency room, were they not getting care? Yes. Who was paying for that care, really? It was the hospital system and whatever they got from the government, right, from the states. So what's happening now is we're doing a cost shift, really. Because I recognize the fact that also we're doing is stabilizing in the ER. But now they're going to have an insurance contract. Okay, so who's paying for that insurance contract? So I hear what you're saying about, look, it is, are you guys looking at this thing from a negative? No, I'd like to make it a better deal, and I truly, what we had before was broken. All right, we can't go back to that system. Anybody who thinks that that was the best system doesn't really understand the problem. Now, is this Shangri-La? Absolutely not. And if you believe that it can't be improved because it's the best it can be, then you don't understand the problem either, right? So it's a migration, it's a process. But I will tell you that the employers are feeling the pain. One of my employers, I'll tell you, has about 30 some odd Kentucky Fried Chicken franchises. He's not here in Texas, he's in a different state. He has approximately 400 employees, about 450. Why don't you do the math? At 2,000 an employee, how much is he going to have to pay as a penalty? It's about $800,000. Well, how many buckets of chicken do you have to sell to make $800,000 in profit? Which, by the way, the penalty is not tax deductible. So not only do you have to pay for the penalty, you have to pay for the tax on the penalty. Well, if he could sell that much more chicken, do you think he'd be doing it? Okay, so now it's tough. So now he has to make some decisions. All right, do I turn all my people into part-time? You know, some of his people do okay with that. Some of these people are entry level. Some of these people, you know, our manager's not doing bad. Is he going to take away coverage for everybody? So that's a long answer to your question. Yes, we have benefits. I think we're discussing on how to fix it. There are good parts to do.
That your employer, 2,000 employees, that employer did not offer health insurance coverage to the employees before ACA, and now they're being required to?
If I had to do that, absolutely.
Is that what's happening with that employer?
No, 2,000, no, it's a bank, and they've been offering high-level benefits for a long time. Now, what's just interesting, I've had another company that had just the reverse. They had about 300 employees, and you know what? Their benefits were so rich, we had to reduce them.
Yeah.
Okay, so go figure. They had a $250 deductible 100% plan, which you can't even buy nowadays, right? So that's, how do you go back and explain to their employees, hey, this is a good deal for you. You didn't have to pay anything for it, you got the best benefits. He competed for labor very heavily, and that was what his plans were. So, you know, there's unintended consequences, and like I said, wherever you squeeze the balloon, there's going to be pain someplace else, no matter what you do. So, thank you for the question.
Thank you.
Have I gained more clients? Yes. Is it more difficult to service those clients? Yes. Remember I said earlier that if you were under 65 prior to the passing of this act, I can help you with insurance at any time. Now I don't have that ability. About 75% of my book of business is Medicare. So if any of you know anything about CPAs, right, you know what it's like April 15th now. Well, for those of us that sell Medicare, between October 15th and December the 7th, we're working 7 days a week, 12, 14 hours a day to help our clients pick a plan, figure out what they need to do, because that's the only time that they have to do it. Now, if you add that on top of that now my entire book of individual clients under 65 all basically got to get enrolled at the same time as well, there's only so much dough to go around. Okay? So that's my negative. I think that I understand the idea of we need an open enrollment period. A suggestion that I have, which I'm actually going to be taking to Congress on the 24th of February, because I'll be up there lobbying on the Hill, is that perhaps we ought to be looking at this open enrollment period for individuals being centered around your birthday.
Like Social Security.
Like Social Security. And so you have a period of 3 months or whatever around your birthday of when you can enroll in a plan. not like going online and picking a cruise, okay? You pick the wrong cruise, you have a really crappy vacation. You pick the wrong insurance, it could be like a death situation.
And I'll be there before you make the same appeal, because as a small insurance company, we can't deal with having everybody re-enroll at the same time too, and having that spread out would make a lot more sense.
Insurers now, if we call them, if I have a question, I'm sometimes on hold 2 to 3 hours to answer a question from the client, okay? So I'm having to multitask and do other things while I'm doing that. Unfortunately, the people that I'm now talking to after I've been on hold for 2 to 3 hours are temporary staff that they've had to hire because the volume of calls is so great that aren't as knowledgeable. You all know who Mattress Mac is, right? He does that commercial today. Well, that's what I say to my clients now. Joe, what's the answer to this question? I say, well, today the answer is this, but you know what? This law is moving so fast that call me tomorrow and I might have a different answer for you. That's if I can get an insurer on the phone to answer.
Yes, ma'am.
To that point, it sounds like we're solving today's problems with yesterday's solutions, and I'm curious, especially with United Healthcare, is there anything innovative being done to kind of rectify the situation? Because the administrative cost of running the insurance companies, it's just outlandish, and we've got a growing senior population, we've got a workforce shortage in the healthcare industry. We're not going to be able to continue, even with this federally mandated.
Well, when you say innovation, are you talking about in terms of like leveraging data? Are you talking about
Leveraging analytics, absolutely, population health. I know my insurance, because I got a notice that I've got Teladoc now, so I can call and not leave my home. So should we be kicking into more of those types of things?
Well, we are. You know, I think it's fair to say that especially, I know I can speak for us, you know, we bet on technology and data 20 years ago when others in our industry were kind of scratching their heads as to what we were going to do with it. And I think now we've evolved into a situation where you're using data, to your point, first to understand population and how you improve the health. Because the reality is, we all know to curb the cost of healthcare, one of the single biggest contributing factors is us as individuals, right? What do we decide to do? You know, do we get up and go jogging? Do we eat the cheeseburger? Or do we have a salad? I mean, it's all based upon us. And so there's no doubt we're leveraging technology, data in our discussions now with hospital systems, physicians, and our network to make sure that we can help them understand. Because as an insurer, we do sit in a unique position in the delivery system, and we see it from 360 degrees because we capture claim data. And so our ability to be able to leverage that and help people understand what's going on, and how do we identify and address gaps in an individual patient or consumer's healthcare to help them get better and not just pay a claim like we used to in the old days. And so I think our relationship with providers, both be it in terms of our business relationship as well as our contractual relationship, is changing. I would also tell you that we're leveraging technology much more effectively in how we engage the consumer and how we interact with them. Everything around transparency of data, so we've got an app that you can utilize that does help you understand what the cost of that MRI might be, based upon the place of service, the provider of service. All of those things have come out in the last 5 to 6 years, and they're not perfect, but they're getting better. We're now leveraging, especially with some of our larger customers, a different type of customer service model, where based upon data, we can determine whether or not an individual is getting preventative services like they should. They might be a diabetic and they haven't had their hemoglobin checked as they should. Well, we have the ability to be able to capture that, and when that individual calls us maybe to get an ID card, we can route them to a clinician to help them engage better. So technology, data, that's all being utilized much more heavily today. On the administrative front, trust me, we're continually trying to become more efficient. We have no choice. be it because of the Affordable Care Act or just because of the general competitive environment in our business, we have no choice but to try to leverage technology to become more efficient. Quite frankly, not only with our customers and consumers, but even with our distribution partners that we work with.
So I was just going to follow on with that question and maybe ask a question that from a more global kind of delivery of healthcare and healthcare financing question. So one of the big things that you always hear about right now is everyone trying to figure out a model to move from the traditional fee-for-service model to a pay-for-performance or pay-for-quality model. And so, and this is kind of very timely because I know Medicare announced yesterday or the day before that they're trying to move, or that their goal is to kind of move by 2018 to have at least 50% of claims being paid not in a traditional fee-for-service model, but in a pay-for-performance, pay-for-quality model. So I was wondering if we could get the panel's kind of insights or thoughts on that. Do you think that that's a good thing to move to? Do you think it's actually attainable because the fee-for-service model is so entrenched, especially on the outpatient side of things? And the requirements that now requires the physicians and hospitals to collaborate, those types of things. So
It's going to happen. It's because it's obviously from a Medicare standpoint, it's the biggest payer. They're going to drive some of the change in compensation models. Medicaid is now very interested in the same issues. So if you look at the state of New York, for example, they're moving very rapidly. Texas is starting to talk about it on the Medicaid side. Consumers are interested. And what's encouraging to me is we've had some recent conversations with partners in large hospital systems and integrated delivery systems like Memorial Hermann and UTMB, Kelsey-Seybold, and those kinds of folks. That certainly seems to us to be a trend to go toward more integrated delivery systems, which allow you to do more innovative bundled payments and other kinds of arrangements where you can actually do pre-sharing. It's really hard to do quality measures, that kind of stuff, when you're dealing with a very fragmented system with lots, in our case, thousands of individual primary care physicians in small practices. So one of the things that potentially is a very good thing is consolidation on the medical side will allow us to do more of these kind of new payment things. But they're complicated too, and to your point about complication in the fee-for-service, some of these models where you're now giving incentive payments for quality measures or trying to do bundled payments, and you have to have stop-loss models and things built into it. It makes it a little bit more complicated now, but I've been very encouraged in the last couple of years that there's really starting to be momentum on lots of different fronts. And I think part of it is on the insurance company's side too. I should not just pick on us too. A lot of insurance companies were in the business of, in the past, of kind of risk selection. You wanted to pick a good risk, and you did much like in the property and casualty world, you wanted to pick good risk. The Affordable Care Act basically told insurance companies, you're out of the risk selection business, now you're in the risk management business because of no pre-existing conditions, and people being able to stay on policies longer, those kind of things. So it's incumbent on all insurance companies to figure out ways to do a better job of risk management. And what all insurance companies have figured out is insurance companies can't do it with insurance company nurses. There has to be a new partnership arrangement with doctors and hospitals. And I think most of the doctors and hospitals are bringing that up pretty fast too.
Yeah, it comes down to understanding data, right? So depending on how far you want to go back, there were models that were similar to what we talk about today, capitation, risk sharing. The issue I think back then was there wasn't the business infrastructure to be able to manage them. And I think now that we have access and we've essentially aggregated data, we do have the ability to be able to help even individual physicians understand how they're practicing against the quality metrics that their individual medical societies have established. We could talk to them about cost efficiency in an episodic way. And then we could share that type of information with consumers to help them understand if you've got an issue This is the best physician for you to go to based upon quality data and cost efficiency. And then when you kind of roll it up, again, you have much different conversations today with large hospital systems or large physician practices because we have the ability to be able to say, here are the opportunities. Here are the opportunities to improve the health of that population. Here are the opportunities to address gaps in care. And ultimately, that leads to cost savings in an episodic basis. Not necessarily what you pay for the service itself, the unit cost, but when you measure things on an episodic basis, you really can start to draw together how increases in quality ultimately lowers the cost. And that's where we should be. I will tell you, I've been doing this now for 23 years, and when I first started, the conversation that we had with employers, large and small, was much more of a human resources conversation. Today, it is absolutely 100% financial. Cost is king, affordability is what everybody wants to talk about, and I can't tell you how many times I sit in front of customers, be it the owner, the CFO, the COO, the president, and they want to understand what am I getting for the money that I'm spending in my employee benefit package. And we have the ability to be able to do that. And I think it never happens quickly. I mean, I can tell you that from United Healthcare's perspective, we want to see 100% of our healthcare spend go through accountable care type of contracts. But it's not going to happen fast enough just because of the general timing of the business. So I think that's where we're headed. I hope that we're careful that accountable care organizations or patient-centered medical homes don't become insurance products. We need to remember that it's a way to deliver care, and it's a way to hopefully help improve the health of a given population that medical community is responsible for. It shouldn't just be an insurance product, a narrow network product. That will happen, but it's not the genesis of why we're moving in that direction.
I'm going to start by answering your question with another piece that is coming into play, and that's wellness. And wellness is one of the few discounts that you can get through the ACA premium factors. So we are seeing a lot more conversations. The wellness topic is actually a real hard topic. First of all, you have to have buy-in from the employee. To do that, actually, the employee's family. Next is that you cannot have a system that punishes. And this is going to sound the same, but you can't say that, you know what, if you don't participate, I'm going to charge you $20 more per paycheck to be on my medical plan. But what you can say is, hey, if you participate, I'll lower your cost by $20. Now, as far as I'm concerned, we just have the same discussion, but you have to be careful with how you frame it, all right? So, and there are other issues with wellness, but it is nice to see that wellness is coming to the forefront. I do think, and I think a lot of what Dave said really focuses on the large employer in terms of those discussions. You know, in a small market, you get the benefits that are there, and that's really, there isn't any choice as far as how you dissect it or how you decide what you want to have in it. But I do think that we are in a race back to the future. So I think we're heading back to HMOs. And maybe it's flavored differently or provided to us in a different spoonful of sugar, but the bottom line is we are going back to HMOs. And I think that the bundled care model is, it's going to be a different beast, because now what's going to happen is the insurance companies are currently paying, and I hope I'm not getting too technical for you out there. I'll be available afterwards if you really want to discuss it. But insurance companies right now are paying on the CPT side. And with a bundled model, what's going to happen is they're going to pay on the new ICD-10 side. Well, what did I just say? If your standard heart attack costs $75,000, as soon as Mike gets diagnosed with that heart attack and the provider sends the bill to United Healthcare, United Healthcare is going to go, yep, here it is, $75,000 bucks. That's how much the standard heart attack is. Now guess who holds the risk for my care? It's that accountable care organization, right? And that's why I think it was the AMA that released a statistic last year that 75% of all private practices were going to disappear and be owned by some system by the end of 2014. I don't know if that occurred, but I can tell you I've got a lot of my clients who have been bought out. And so it's been an interesting dynamic. So I think that the medical industry is going to be challenged with how you navigate with these bundled care, because what Dave said is prescient in that be careful it doesn't turn into an insurance product, right? Because it should be how you deliver care. I got to tell you, I'm a little concerned as a patient that when I'm in with a bad heart attack and my ACO is looking at it going, man, he's already at 74,000 and at 75. I don't think we need the MRI. Let's just do an X-ray. What do you think? Just saying. Is the doctor going to make that decision? I don't think so. But somebody is, because you know as well as I do that your hospitals, generally speaking, are not run by doctors. So that's a comment.
Just read an article recently that said ACOs are gestational drag. So there's good and bad. Glass half full, glass half empty, right? So the good would be that currently under the system, and specifically since you addressed about Medicare, I do not think that it is realistic that we're going to get to where HHS wants to get to in the period of time that they want us to get to. It's just not possible. But basically, the way Medicare specifically works right now, and a lot of insurance is going to be based on that fee-for-service. So, if they do an MRI, they get paid for an MRI, right? If they run that blood test, they get paid for that blood test. Well, with this ACO model, then basically they're going to be paying, as the panel has already told you, a bundled fee based on your care, and they have an incentive to keep you healthy and keep you out of the hospital. Okay, we have a lot of, I don't know if any of you are familiar with Medicare Advantage plans, but Medicare Advantage plans, they typically follow this whole ACO sort of model. They are regulated. There are star ratings and performance measures. So basically now you have doctors and hospitals that in order to, if they do good, if they manage to keep within that 74,000 heart attack cost, if they can keep you under that 74,000, then they're going to get a bonus, right, for keeping you healthy and spending less money. So these doctors and hospitals are taking on a lot of risk. We're going to see, and we've already seen, primary care physicians. I think over here said, what are we going to do about the fact that we have a shortage of primary care physicians? The whole ACA model, that's the linchpin. You've got to have a primary care physician to coordinate all of this care. What are we going to do if we don't have enough primary care physicians? Right? So there are some things about keeping us healthy that I think will be good. But I also think that a lot of the things that are going to have doctors and hospitals participate in these ACOs are going to require that all of their medical records are automated and digitalized, and a lot of the smaller practice of doctors are not going to be able to afford to do that. And so you're going to see less providers, you're going to see more hospitals buying providers. Memorial Hermann just bought my doctor's office, they're now Memorial Hermann providers. And so I think that in the long run you will see less choice in terms of people, and hopefully we'll have better outcomes, but guess what? Who's really going to drive that? It's us. Are we going to eat better? Are we going to exercise? Are we going to do the things that we need to do to stay healthy? Sometimes I think we're our own worst enemy in terms of how much our healthcare costs.
I wanted a quick note too to add on to what Joe was saying, because I think you're also going to see an expansion of authority with people like PAs, physician's assistants. That's been a historical, what is operating under the guidance of? Does that mean in the building, or does that mean available by phone, right? So is that availability by phone mean in Colorado? I think they just made it clear that it can't be in Costa Rica, right? But so you're going to see some expansions where you're going to have maybe services that are challenged on how you deliver it because of the pressure that's put on them. So, the dental industry's been dealing with that for quite a while, and so has the optometry and optometrists, that's fun, right? So I think you're going to see more of that coming out as well with the physicians.
So one other question related to kind of payment models is in the current fee-for-service system, for on the commercial side of insurance, we've got in-network and out-of-network providers. And there's been a move by certain providers in the last couple of years, whether it's because they can't get a network or get a participating provider agreement with an insurance company, or the rates that the insurance company will give the provider are low. A lot of the providers have decided this out-of-network strategy, where they're not going to take any insurance, they're going to bill everything out of the network. And putting on my attorney hat, what I've seen a lot of in the Houston market, at least, is there's been more aggressive attempts by health insurance companies, not United, but other health insurers in the Houston market to aggressively go after providers who only charge out-of-network, in the out-of-network model. So I just wanted to see if anyone had a comment on the out-of-network model, if wanted to mention it. Do you think it'll be around? Do you think it's one of those passing fads where people have realized they can, some of the providers being cynical can make a lot of money out of it, and it's gonna tighten up, and that's not gonna be a model that's gonna be around in the next couple of years?
Two different models, or two different problems. There's the out-of-network emergency room standalone, that strategy, where because of the existing law says if you have an emergency, insurance companies have to pay for your emergency at the network benefit level. So that is a finance strategy which will eventually be fixed. It will be fixed in one way by, as Mike talked about, more and more people getting into an HMO environment. Because then you basically have to go in-network, and the HMOs have a little bit different leverage when you do go out of network. Member is held harmless, so the provider has to fight with the insurance company, not with the member, about getting paid extra. That will change the dynamics a little bit. So that one, we'll see how that happens. The other one that's problematic but should be fixed, but I'm not sure, frankly, that it's going to be fixed anytime soon, because it's a three-way problem. It's a problem between the insurance company and the hospital and the hospital-based physicians that don't participate. So those of you who are in the medical space know that most hospitals have anesthesiologists, radiologists, emergency room doctors that are pretty much granted an exclusive contract to operate in that hospital, but are not employees of the hospital. And so that is to solve that problem. It's going to actually take a little bit of a compromise on doctors, hospitals, and insurance companies to get that solved. Of course, it could be solved like most other states have solved it by letting those doctors be employed by the hospitals.
And I think we have time for one more comment.
Okay. So I would echo, my opinion is it's a business model. It's not about quality of care. It's not about delivery of care. It's a business model. And I would actually say it's not just hospital-based physicians. It's not only freestanding emergency rooms. It's ambulatory surgical centers, and it's even acute care hospitals. And I will tell you, I've sat in front of executives of those organizations, and it is a business model to stay out of network with any payer for a certain period of time, either to be able to aggregate critical mass, to be able to negotiate better contracts, or just to see how long the business model will last. And I think what I know what we're doing is, first, we're trying to educate the individual consumer and make sure they understand what the cost impacts are to them as individuals if they or their physician sends them to an out-of-network facility. Unfortunately, it does mean from time to time the individual consumer gets pulled into that discussion, as Ken said, between the insurance company and the provider. And it's unfortunate, but I think in order for the model to change, the business model to change, that's going to have to happen. I also think back to the accountable care or the value-based contracting strategies. That is where you have the ability to be able to have those impact the network status, I'll call it, of hospital-based physicians, as well as ambulatory surgical centers and facilities, because that is where there's an opportunity to eliminate waste in the system, because again, it's purely unit cost. It's not about quality or delivery of care. It's about the cost of that service. And I think what's been interesting to me over the last few months, you're starting to see the media pick up on these out-of-network services. And I think that also, quite frankly, will help things change. So it's not going to happen quick enough for any of us, but I do think it can change.
Johnson, can I just say, I think it's very interesting take for reimbursement. I think that one of the reasons a lot of doctors are choosing to go out of network is because they want to practice medicine and they're tired of having to negotiate how much they're going to get paid for practicing that medicine. So, I think it's unfortunate that we don't have a doctor here this evening that can perhaps give you that side of the story as well.
And quickly, even if that model does go by the wayside, I think you're still going to find a marketplace for concierge medical, which is by definition network.
We have one more question. Yes, sir.
This question is for David. There seems to be a trend for organizations like McLaughlin to go out and consolidate and have their own insurance plans to cut the middleman out. So how much of a threat is that to traditional insurance companies like United, Blue Cross?
I actually think we're going to have, I think in a few years we're going to have competitors in our market that we haven't even thought of. As technology gets leveraged, as different things happen, I think you're going to have that. I worked 20 years ago almost now, I worked for a hospital-owned health plan. They've been in existence for quite a while, some have done better than others. So, I think they'll be a part of it. But so what does that force us to do? It forces us to be able to offer products and services that are better than maybe what we would otherwise. So I'm not, I think they're here to stay, but I don't think that it necessarily means that there's not opportunity for the private insurers. Just because of the sheer scope that we have the ability to be able to offer similar type of benefits to an employer that has people in 50 states. You're starting to see, United Healthcare in particular, we're starting to do more international programs and services. So, I think they're here to stay. Some will come, some will go, but we just can only focus on what we do and how we do it, and hope that that's what the marketplace wants.
Well, I want to thank everyone, our esteemed experts, for being here tonight. I know we have some time at the end for questions and answers, but I don't want to turn it over for our next portion of the presentation.
Thank you very much, Jonathan, for the lively discussion. We will just change gears a little bit right now for two reasons. One is personal, and another is the place where I work. We at RISE encourage a lot of entrepreneurship, so that's why I thought it's interesting to include someone, to get someone to talk about his entrepreneurship, a senior entrepreneur, to talk about his experience in building this company. Second MD. And the reason why I connected with this company is my personal experience. My daughter is 15, and when she was 13, and she plays the viola and violin quite intensely. When she was 13, one morning she was practicing and she couldn't hold her instrument up on her left hand anymore. She had shooting pain, tingling, and numbness. So we thought it was because of overextension of her left arm. But so she stopped playing for about a week, but it did not go. In fact, it went to her right side, right arm, right hand, and eventually one evening it was so bad she couldn't stand. We had to take her to the emergency department at Texas Children's Hospital. After a series of investigations, CT scan, MRI, everything is normal. By that time, I realized what was happening is she was holding her instrument in such a bad posture that she was getting thoracic outlet syndrome. But no physician would believe that. To the extent that someone even insinuated, maybe because she's a high performer, it's just psychological. But it took me a while, at least 3 months, despite being a physician, despite being connected to the provider sector so well, we couldn't come to a diagnosis. So when I saw second MD, I thought this is a good story to go out and talk about. And that's why I invited Phillips to come today and talk about why he created second MD and what he's doing with this company.
Thank you, Benata, smart people. Thank you, Ken, David, Mike, Joe, for some very insightful comments there. This is a whole new world, and it's quite comical that I would be standing talking amongst insurance people. When I came to the US 12 years ago, I had never seen such a expensive what I thought was expensive back then. And when I looked at the health insurance for my little family, I said, this is crazy. I figured out that we had about a 7% chance of something big happening. And that if we put the money aside, it would probably fare a little better. The problem was that I played rugby, and that increased my risk somewhat. But even then, we worked out we were saving $10,000 plus a year, avoiding going into the system. Unfortunately, Joe has depressed me tonight, as I have found out that I will be paying some taxes as I am not covered by insurance.
Call my office tomorrow, I'll get you all that.
That's a good solid. So, very interestingly, how did we get into this business? We had a clinic in Aspen, Colorado at this Regis Hotel, and we helped people avoid back surgery. I was originally trained as a chiropractor and physical therapist, and people, an abundance of surgery. We helped people find out that there were some alternatives to surgery, and we had an incredibly efficient and effective program. Interestingly enough, we couldn't get paid $3,000 to help somebody avoid surgery, but if we sent them for surgery, they'd get paid. The surgery cost would be paid $50,000 to $60,000. So some of the challenges we had there in the early day with insurance, we were more of a concierge model. The next slide, you'll see, I've got a little clicker right here, thank you, Benota, is that little angel. That little girl there, Gabby, my daughter, she had a stroke at birth, and we didn't even know a baby could have a stroke. A stroke is something you figure your grandparent has. Our daughter had a stroke, and the first doctor we saw said, she's lost half of her brain practically to scar tissue, and she'll lose the ability to walk or talk. She just won't be able to develop that ability, and we could see she was completely paralyzed on the right side. Obviously very scary for a parent. We felt somewhat connected. We were sort of in healthcare, we knew people, but even then, what were we to do? The doctor that we saw, we had to travel to in Denver, Colorado, and we didn't know, was this a great doctor? Was this what all doctors would say, that there's not much you can do, try therapy? So we called up to hospitals around the country, top doctors, and the answer was the same. We'd say, can I talk to the doctor? I want to ask him about this type of therapy. And they would say, you can't talk to the doctor, you have to come here. And which you and I know means paperwork, sitting in this room, waiting to go through the next room, all the questions about insurance, when I'm just saying I'll pay cash. Can I pay $300 to talk to that doctor on the phone? No. Can I Skype with the doctor for $500? No, we don't do that. So, as crazy as it was, I know that if you're persistent, you can get hold of almost anyone in the world. It is impossible to get hold of a specialist. In fact, speaking to a specialist directly, if you're not their patient, is just not something that has ever been available. So we said we are going to build a world where you can speak to the world's best doctors by video from anywhere. I took that plan back to some of our millionaire clients that we had in Aspen and said, here's what we're going to do, and they said, we love it. We've got no idea if it'll work, but let's give it a try. So we stepped into this world of, we needed to have technology that could easily do a video consult. Doctors didn't want to be on Skype. We had to convince the world's busiest doctors to give up their spare time, nights, weekends, to be able to consult people that they didn't know. We had to look at the legal landscape, because every state has different laws about what a doctor from another state can or can't do. We're going to have to look at countries. What was Mexico, Canada, Brazil, South Africa? What were the policies around those pieces? But that's a little of our background of how we ended up in a telehealth piece of healthcare. What is telehealth? You'll hear the words telemedicine, telehealth. We heard Teladoc earlier there. Telemedicine is the diagnosis and treatment using technology or telecommunications. Telehealth is a broader category that includes clinical support, professional guidance, various pieces that are using telecommunications to be able to help somebody in a health interaction further themselves. What are the benefits to these? The benefits are pretty obvious. The savings. It is a much more efficient model sometimes where you can get hold of your doctor on the phone. They don't have to come into the office. You don't have to go to the office. They don't have to pretend to look down your throats or do any of those things, or put their stethoscope on your chest when they already know they're going to give you an antibiotic. And it makes just a lot more of There's a lot of savings models around that, and one of the solutions, hopefully, for the shortage in primary care is providing some of this access. There are now people I know that are covered by 2 telemedicine services, and they've bought some concierge service. All of a sudden, their world, access has changed. So access is very different. There are now something like 16 million people by the end of this year that will have TeleDoc as a provider. Close to maybe half that amount will have MD Live Care as a provider. Doctors on demand, you see them touted on the Dr. Phil show. They are providing quick access mostly to prescriptions. 80-90% of the consultations are around upper respiratory infections, UTIs, and it provides a very efficient model in telemedicine, telehealth types of pieces. And there's a far bigger scope we don't have the time to get into of remote monitoring, checking in on people, making sure people don't have to re-admit into the hospital unless they actually needed to. Various opportunities. Affordability. Most of the primary care telemedicine solutions are charging around $40, which is very efficient enough that people are saying, I will pay that out of pocket, or I'll pay something towards that. Some of the companies will leave the employee with the ability to keep their $25 copay, they'll pick up the other $15, or various other models. And that's a big change from what you might have been charged $60 for an in-person doctor visit. Quality of life. It is unfortunate we don't have a doctor here. We have 350 of the top specialists around the country, and speaking from a physician's perspective, they have huge challenges around healthcare. What we think is a problem for the employer is often very differently felt. And there's a huge amount of challenge. It's the first time in American history that doctors are telling their children to not become doctors. And that's a very sad landscape where doctors go, you know, I'm glad I did this, but I sure wouldn't want my child giving up the next 40 years of their career in this type of environment. So quality of life for the doctor, quality of life for a mom who can get a prescription at 11 o'clock at night, called into CVS, provides some incredible opportunities. Not what our company does, but those are some of the biggest pieces we see that there is already some good data around, because there are now hundreds of thousands of these consultations starting to happen. We have some good ideas around what are the costs, what are the outcomes, is it cost shifting, is it actual cost avoidance, what does it look like at the end of the year, and there's a tremendous amount of data that you wouldn't want me to bore you with tonight, but is easily to provide. The concerns, USA Today must have had 10 articles on the front page around telemedicine in the last year, and they're generally very positive, but the same concerns always come up, is it safe? Who's this doctor that I'm speaking to? Am I misusing the service? Are people getting overtreated? Are you getting easier access to medications? Would you have been better off waiting the night out and the fever having broke by the morning anyway? So a lot of things around the safety. Who is the doctor? A lot of the concerns around the doctor out of state prescribing you something, and states that to grapple and catch up very quickly with what is their policies that they will allow a doctor out of state to do, not allowed to do, what will they allow their own doctor in state to do. Texas has a particularly strong position that they've fought that says that you cannot have a consult, you cannot get a prescription from a doctor that you do not have a prior existing relationship with. There's a bit of variance on what that prior relationship means, but ideally you need to have been treated by that doctor before, you need to have met that person, been admitted with that doctor in some capacity before you can get treated and get a prescription from that physician. Other states like Oklahoma have made it incredibly difficult. Other states have seen the good that far outweighs the bad, and have been a little more supportive around those pieces, but it's new for everybody. This is a race this is the fastest growing segment of healthcare. 5 years ago, not 1% of the population had some type of telemedicine service. Now we think 10 to 15% of the US population have access or provided through their employer, through the insurer, some type of telemedicine access. So we see the growth is staggering. Quality. Who are the the doctors that you're going to see are telemedicine doctors, going to be the lowest cost providers. Reimbursement. What is reimbursement for these doctors? Some of the companies are paying $30 to pay a doctor to spend 5 minutes with you on the phone. Some of the companies are paying doctors $20, going down to $18. So you know that when a doctor is being reimbursed such a low rate, quality has to suffer, because now the doctor has the opportunity to try and churn through 200 people in a day. We know that quality will suffer, but there are some metrics and some things that some of the leaders have put in place that have helped to really do some incredible work on comparative studies on a telemedicine visit versus an in-person visit. Obviously, the lack of ability to physically assess somebody is an important piece, but you may have noticed that it's been quite some years since your doctor undressed you, sat you down, felt, palpated every area, did a full systems review. Those things have changed already, where a doctor now is far more commonly sitting across the desk from you, talking to you, looking at information, which is, if I'm sitting across the desk from you, I might as well sit across the computer from you somewhere else. So lots of challenges and pieces around those areas, but that's looking strong. Who pays? You know, speaking to a doctor by phone is nothing new. You could have done that. Some people who had a concierge service or had a friend as a doctor. You've been speaking to your doctor for 20 years and they've done something for you. But one of the biggest reasons telemedicine did not move forward 5, 10, 20 years ago is that there was not a reimbursement model around you to speak to your doctor. And people would always say, you've heard your friends say it, maybe you said it, I don't know why my doctor makes me come in. I know what he's going to do. He knows what's wrong. But he makes me come in, sit there, wait to do it, and then gives me the prescription. Why won't he just do that for me? Well, the truth is that there was no ability for your doctor to get paid. So if he helped everybody who called him on the phone, he would have been doing free service all day. And while that might be nice and they might do it for their friends, there was not really a reimbursement model around that type of care for them. We see consumers for the first time starting to say, you know what, I can't wait. I need something quicker. So you know what, I'm willing to pay. Technology has enabled it to be quick, to be simple, to be cheaper. That for $40 you can go on your phone right now, download the Doctors on Demand app, and be talking to a physician in 3 minutes, licensed in your state, to be able to call something in for you. So consumers are either feeling enough of the pain to say, you know what, we need to pay something, or it's becoming more efficient and cheaper where they are stepping up to it. The next piece we see is the carrier. There are some significantly large deals between American Well, Teledoc, MD Live with insurance carriers, where carriers are starting to get into that area. We used the Business Journal yesterday. We just licensed the largest insurer in the world, Discovery Health in South Africa, to be able to provide free doctor visits. Their members starting in March will be able to get free doctor visits through their iPhone and Android device. Huge game changer in South Africa, where the insurer now says we will, it's cheaper, and we know it's better in satisfaction and various reasons. It's better if we can resolve those issues quickly and easily for our members, and they're taking it hugely. We're doing a similar thing for one of the larger UK insurance carriers as well, who, not too similar to what David said, we have systems whereby if somebody calls in to speak to the physician can now see that they have been enrolled in the wellness program, their claims, they've had some persistent type of claims that the physician now will be routed to them and is actually empowered and enabled to be able to do something for you. So that's pretty exciting, and we're very excited to do the technology behind what these companies are doing. Companies, a lot of our service, which I'll tell you about in a moment, sells directly to medium and large employers, but companies now, whether it's out of benefit, whether it's out of cost saving, whether it's out of just trying to provide ease for their people, are looking at these services at the moment. And to David's point, they have a laser focus on cost. We have a service that's a wonderful benefit. They say that's great that it's a benefit, but unless this saves me money, that's all I care about right now. I need to be able to get my hands around costs. Lastly, hospitals. do some pilots with hospitals this year, where hospitals are actually saying, we will pay the doctor to give a consult with somebody, because if we get the right type of person from that who comes to our hospital for treatment, that has a great opportunity for us to recognize revenue from the right people in the right situations. So some interesting opportunities around why telemedicine, telehealth is accelerating, is because you have all four of those areas where reimbursement and payment is starting to be able to flow from us. The legalities, federal, state, medical boards, very scary for medical boards in different states to go, wait a minute, who's going to take my people's business? Who's going to take my husband's medical business away? Now there's some doctor somewhere else in the country that's going to do it. Heaven forbid, a doctor somewhere else in the world that might be talking to them and taking jobs away. So there's been a huge protective mechanism around state medical boards saying, wait a minute, we have to protect our territory. Some of those things are necessary, some of those things are unnecessary, and we're working through a lot of what those pieces are at the moment, but states are having to deal with these pieces. Primary versus specialty here, I'm just going to highlight two areas where we see fantastic use of telemedicine or telehealth. Telemedicine more on the left under primary care. Those are the teledocs, MD Lives, Doctors on Demand type of companies who are providing diagnosis and treatment within 30 minutes for common conditions. Very effective. On the other side, what we do as our business is we said we are going to connect people to the world's best doctors via video for specialty-related issues. You've been diagnosed already with something, you've been given something difficult to understand, not sure whether your doctor's up to date or correct or confused, and you need to speak to somebody around cancer, a surgery, a change in medication, my daughter's own case. What can we do about our daughter? We had phoned around the entire country. We came down to Houston from Colorado, and at the Texas Children's Hospital, incredible hospital, 4-month waiting list to see the pediatric neurologist. 4 months. At a time when your daughter's brain is like developing incorrectly. You can't get in to see. We phone, we try to get people, 4-month wait. We finally see the doctor. It's quite funny, when we do see the doctor before the appointment, we pay cash for everything. Say, what is it going to cost to speak to the doctor? What do you mean? How much am I going to have to pay to speak to the doctor? I'm here for the appointment. Cash pay? Oh, we don't know what it costs. I'm about to walk in there and talk to that doctor, and you don't know what it's going to cost. Oh, somewhere between $180 and $360 for however many minutes you get. So which is it? Is it more towards the 180s, more towards the 360? We've got no idea. I have to ask, well, who does have an idea? Turns out no one has an idea. You walk out, they charge you $270, and you get a bill a week later for another $180 for some facility. So very frustrating, but this doctor says to us, I'm not the right doctor for you. We've waited 4 months to see this pediatric neurologist, and she recommends somebody with a 3-month waiting list. This is in the great, big, beautiful, sexy Texas Medical Center. You're having to wait 7 months to speak to somebody about a pediatric neurology idea. We laugh that we found it easier to raise millions of dollars, build a legal structure, build technology, and sign up the Miami Children's Pediatric Neurology Department than it was to actually just get a consult here with a physician. We sat down with our daughter on our lap in Houston, consulted with the head of Miami Children's Pediatric Neurology, and he gave us the landscape of how you treat this stroke recovery that my daughter had struggled. It was life-changing. In 20 minutes, he said, don't waste your time here, don't waste your time, and you consider this, have a look at that program. We knew we had something. We started providing our services to consumers, but there was a difficulty around consumers being able to get their medical records to be able to get reviewed. So we realized that 1 in 9 people who were using our service were cancelling a medical procedure. We have doctors at every one of these great hospitals. We have doctors at all 17 of the top 17 institutions. We now serve companies, so companies now buy this for their employees. And some huge companies will come on board this year to say, you now have access to the world's best doctors via a video consult. It's absolutely life-changing. But as we were saying, 1 in 9 people who do a consult with us will cancel a surgery. So the program pays for itself very easily by the people who've been told by this doctor, oh, you have to do this. You've got no other option. We had a lady who was about to have brain surgery. Our doctor spoke to her, looked at her CT scan, and said, oh no, that's not a tumor. It's a shadow from the CT scan. She said, you must be crazy. I'm scheduled for surgery on my pituitary gland. She said, no, it's just a shadow. Get another CT scan. Get another CT scan. Brain's completely clear. This only happened to people who've been sent home to die at companies, and they get a consult from one of our physicians and they say, has nobody told them about this chemotherapy? Has nobody ever mentioned this treatment option? And people have gone back to work alive after just some outrageous things where doctors are busy, they're behind, you're not seeing the right doctor necessarily, and I could go into all the challenges around that. This is what it looks like to be able to consult a doctor. They can see your files, they can see your records. Our doctors require that you already have a diagnosis. Our doctors are not diagnosing or treating. Our doctors are providing direction, advice, support around what your next steps are. The future, we have some giant ambitions to be able to make healthcare exponentially easier and more effective for people. And within the next year, you will be able to sit at home using the 2nd app, have great access to a great doctor, have your medical records there, but it will be synchronized from real-time data of different devices that you may have in your house or might be monitoring you. It's a new world where we're very excited that my child, when I tell him that people used to have to wait 45 minutes to hours in a doctor's office, fill out all this paperwork that the doctor never looked at, to speak to a doctor that you didn't even know if they were the right fit for you and didn't know what it cost. And you can sit on your couch in the evening is an amazing change. We're very proud of the fact that we've been able to align the incentives of the doctor. We pay our doctors very well, hundreds of dollars per 20-minute increment for their time. They don't get more money to push you towards an expensive option. They can't treat you, they're not your treating physician. So if they tell you, you should consider a surgery, you probably should. If they tell you there's an alternative option, you should probably consider that. So the alignment between the physician is being well paid for their time, removes the incentive to try and make more or less money out of it. The incentive for the employer is wonderful. It says, if my people get better advice, I spend less money, and they make better choices. It's great for me, and it's incredible for the employee who gets a letter, and 40,000 employees of waste management, March 1st, 20,000 on truck drivers get a letter to say, you now have access to the world's best doctors. Life-changing for them. Absolutely life-changing in the impact that it can make. As far as the Affordable Health Care Act goes for our business, we know that the healthcare landscape, seeing specialists was more and more difficult. Something had to change. This hasn't necessarily helped our business because there's been a huge distraction by every employer we speak to who says, I would love to do this for my people, but you know what, right now, I'm so buried in trying to understand what I'm going to do, and the fact that my costs may double next year. Massive companies with tens of thousands of employees are looking at 50% increases in their healthcare. They go, this is wonderful to do something nice for my people right now. What I'm trying to do is not lose my job and not get into trouble. So some of those are the challenges we see. We had to take a somewhat outside of the system approach, outside of the insurance carrier. Companies pay us on a per employee per month basis, outside of their in-network, out-of-network, let's say concierge services, we alluded to earlier. So a few of those things put together, and very honored to be here. And we're making a huge difference in healthcare out of Houston. And so many times people always ask, how's my daughter? My little girl is 5 now. She was told she'd never walk or talk. She's enrolled in regular school. I always get emotional. I have to pause. She is beautiful, smart. She cannot use her right hand yet. But everything else is wonderful. She's running around. She feels like a very normal little girl. And we're thankful that that was the difference we could make in being able to speak to somebody who knew what they were talking about in an easy manner. So thank you very much for your time. Thank you.
I would like to thank all the Dave? Thank you, Mike.
Thank you. And thank all of you for the good questions and participation as well.
Thank you, Ken. I must say the whole idea of this symposium started with Ken. He is the first one I approached and he gave me the idea of how we could possibly approach it, what kind of pieces we could have. So a special thanks, Ken. Thank you, Joe. And thank you very much, Janda, for moderating the whole session, and thank you, Ken, for coming over here and presenting. So we welcome you to enjoy some drinks and food is at the back, so feel free to enjoy.
Sir?